When you do a podcast on a daily basis that covers the financial markets, you have to adapt. You have to find the catalysts that are moving the markets on a daily basis. And that daily movement develops into longer term trends. Whether you like it or not, AI is reshaping the way we do things and having some long-term implications. We talked a lot about it yesterday. We're going to talk about it again today. And if you disagree, if you have arguments contrary to our thesis, we'd love to hear it because that's what we're about here on Pre-Market Prep. We'll cover some earnings if you really want to. We'll cover some ratings if you really want to. We will cover the CPI, the return of Blue Putnam. Get his impact on inflation or deflation. Everyone take Monday off on me. It's a Friday, the 13th, Pre-Market Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, carryover from yesterday's decline off the pre-market low, down 12 handles, 68.38. The buck showed a little bit of strength here to end the week off the highs, up 9 cents, 96.92. TLT down 32 cents. Nice rally the last couple days. USO, I don't have it moving much here. Have it flat here, 76.38. GLD, SLV bouncing around like a ping pong ball. SLV, the big winner here, up over 4%, 70.60, up 287. GLD up 4.24. That's about 1%, 455.63. And Bitcoin futures, they're bouncing 65 to 70, 65 to 70. They are up $1,725. These charts are brought to you by TradeStation. Chart, analyze, customize, all-in-one program. Trade smarter, move faster, and stay in control with a platform built for serious traders like you, me, and Triple D. You know how good AI is? Let's bring Dennis on here. I don't know how, when I was doing my little opening rant there, somehow my Apple Watch picked up the word deflationary and gave me a whole thing on deflationary patterns. And I didn't even go,
hey, Apple sucks with AI. They don't even know what they're doing with AI. They haven't been able to figure it out forever. Siri, they've been upgrading Siri for 10 years. It's the same Siri we had 10 years ago. I asked Siri to do something and it can't even figure it out. If one person has dropped the ball on AI, it's Tim Cook. Sorry, Timmy, but holy crap, man. I know, obviously you got left a legacy. You had the iPhone cash cow. You milked that tremendously here. But man, Siri was there. Like just go back and imagine, if, Tim Cook wasn't there. Like they were left so much. 2013. Like what? Siri is awful. Just awful.
Okay. I'm sorry I mentioned it. I'm sorry.
Good morning, pre-market prep.
I absolutely do you use Siri?
I don't have an Apple.
Oh, you don't even use that at all.
Believe it or not.
I mean, Steve Jobs was the visionary of visionaries. And I just look at Apple and I think all this has been is multiple expansion and milking the iPhone cash cow. Like there's been no innovation. Like they had Siri 12 years ago. Siri should be doing wonderful things. Siri should be where like Gemini and ChatGPT is. Siri should be doing it all. I don't know what they've done wrong, but they just haven't done anything with it. It's the same. It's the one thing that never got better.
I mean, remember a few days ago when it seemed the market was rewarding Apple for not focusing on AI infrastructure investments.
So maybe he's smarter than all of us. You don't focus on AI now because AI is now the boogie word. It's like the boogeyman word. Like it was last year. If a company mentioned AI, the stocks are flying. Now if a company gets mentioned by AI, oh my gosh, it's a disruption. What brings us to what are they coming for today? Because I'm going to tell you, There's not a lot of people who had the trucking industry on their AI disruption radar yesterday.
Bingo card.
Bring up the charts here, Joel, from the trucking industry yesterday. And I know they're trying to say, oh, there was some program created by a $6 million company to like automate the logistics and all this other crap. CHRW gives back 3 months of gains in about 3 minutes yesterday. Like just like, well, it's longer than 3 minutes, say 3 hours. But look at the candle. These are what Joel calls warning candles.
The warning candle.
Wasn't warning. That's called a destruction candle.
That's just not fair.
It's just not fair. XPO Logistics, same thing. Just absolutely hammered. LSTR, bring up this one. Landstar System. Stock having a nice solid climb. Value stock, lower PE.
La, la, la.
Bam! 3 months of gains gone in 3 hours. How you like them apples?
Yeah.
How you like them apples?
You know what Michael Feehan said? He said, what about healthcare logistics, healthcare shipping, McKesson, CAH, Cardinal Health? Those ones seems like they came for those ones
They had
yesterday.
warning candles yesterday, so it's probably coming for them too. But this is what I'm sitting at. And I was talking with another trader, and he's like, I don't even know if we can invest in single stocks right now because you don't know what industry it's coming. You better just buy SPY and hold on to SPY. Maybe SPY, it's starting to roll over now too, but it's held up so resiliently well. But I mean, what's safe? Like when they're coming for trucking stocks, like I'm like, how does this make any sense?
Well, can you automate logistics?
I don't know. I guess you can automate everything. The question is, what can't you automate? I mean, really, that brought us back to the staples yesterday. Like, it's hard to automate selling groceries, but then, there's going to be able to make more money because of that. That's why I recently bought Kroger, and Walmart keeps expanding. And you're looking at like AT&T and Verizon. These two stocks, Joel, AT&T and Verizon, have their best markets ever. This is not because of company fundamentals. This is because they feel like their businesses aren't ripe for AI disruption. It's like people are flying into safety, and it's not just enough to be in safe stocks, lower P names. You got to be in stocks that you think aren't ripe for AI disruption. So again, what are they coming for today? It's going to be another sector. It's going to be another bunch of stocks that get AI'd. Last year they got AI'd and the stocks would go up 25%. This year they get AI'd and they go down 25%. That's like, I don't know what they're going to come for today. Chat, we want to hear from you. What are they coming for next?
Just as a case in point, something relevant for yesterday. Yesterday we got or was it Wednesday? Today's Friday. 2 days ago, we got our jobs data, and our jobs data showed lots of growth. And over the next couple of days, we heard a lot about where that growth is coming from. People were talking about healthcare and services. Healthcare added I forget how many jobs it was, 70,000 jobs or something like that. It was like half of the job game from our data on Wednesday. So, I mean, just as a talking point, could they come for how can you automate healthcare jobs?
Why not?
I was thinking about that too. The medical
I don't know.
field. Is the medical field safe, Dennis?
No, I don't know what is safe here. Like, that's where I'm trying to figure out where to invest, and we're having this discussion, trying to go. And we can clearly see the market. So let's talk about the winners, because we've been talking about the losers a lot. The winners have been staples. Well, that feels like something that actually could make more money because of AI efficiencies. There's going to be efficiencies here. Let's talk to AI taking away everybody's jobs. We can go in that conversation. We've done that before, and we don't want to exhaust our listeners here. But AI is going to also create AI efficiencies. These job losses are going to make more money for a lot of companies here. Is it possible that stocks like Procter & Gamble and Coca-Cola, lose a little bit of middle management, have a little bit more efficiencies, but the demand for their products stays strong? I think the answer is yes, and I think that's why Coca-Cola relentlessly bid. PepsiCo made new 52-week highs yesterday. Procter & Gamble, Johnson & Johnson relentlessly bid here. Probably because actually AI maybe makes their businesses more efficient, and the end result, the end products that they're selling aren't going to be disrupted. So, I mean, that's where it's at. And then you can go to ground zero and bring up H&R Block, because think about this one. Just stop and think for a second. I mean, accounting services? That sounds like very easy for AI to do almost now. I'm going to just plug in, give them my tax receipts, give them everything, spit out my return and file it for me.
Dennis's accountant, if you're watching, this is the time you stop listening now. Mute it.
Stop listening. Yeah,
I'll give you a signal. I'll give the all clear when you can start listening again.
This is like H&R Block going from 40 to 28 is probably the most rational thing the stock market has ever done. So I know if you're looking and saying, holy cow, H&R Block, it's got a 5.89% dividend. Accounting services aren't going away. No, they are. They actually are going away. The AI is going to be able to do that easily. That's going to be like, that's a no-brainer. Can AI do other things? Well, that's left up to the imagination. I think AI is going to do a lot of things, but accounting services, legal services, man, that stuff there, that's going to be disrupted big time and probably being disrupted actually right now. So that's like today. And that's why you're seeing, legal services. We saw LegalZoom, or which one was like, that's going straight down, Zebra 10, but that's been going down for years. I mean, these are like the businesses that they're not going to be able to sell their end products. If you're selling services, like if you're selling a job that's done on the computer and you're selling that as an end product, that's ripe for disruption. Food, Coke, that's safer. AT&T, Verizon, I mean, and then power, the utilities starting to go up. Obviously we've talked about nuclear in the utility trade. Utilities have been left behind, but they're defensive. Like people are going to need to keep their power on. People are going to need more power. So I think like XLU makes a lot of sense here. I think it's defensive. Does the valuation really cheap? No, but again, I mean, it kind of makes sense. It's not just from a defensive perspective. It's also from this perspective that these businesses are very safe. The stuff they're selling is going to be needed, and probably you need it even more.
Dennis, okay, so back to your accountant for a sec. Okay, so you pay your accountant a few grand a year to do your accountant. Sure. Where's that money gonna go? Where's that $5,000 gonna go that you paid your accountant?
Well, so we could get into a whole thing. If AI starts disrupting so many different businesses here, if AI actually makes the world more efficient, Kathy Wood's deflationary call from a decade ago, which has been absolutely wrong, could end up being right. So we get CPI data today. And again, I'm setting myself up for disappointment here because it'll probably be hot. But what I'm arguing here is that we actually have a case that AI is probably going to be very deflationary for the overall market here. And I never talked about deflation. I said when people start talking about deflation, stop listening because these people don't know what they're talking about. I'm telling you, AI changes that though now. Yeah, so really. The conversation actually does go to potential deflation. Does that mean deflation of assets? I don't think physical goods. So we had Mish Schneider on here. Mish, if you're listening, we love you. Talking about buying commodities, buying about like going out and buying grain, buying physical stuff. I mean, that kind of makes sense to me, like buying physical goods, buying physical stuff. But if you're in a services business, you're in like, something that's advisory services, consulting services, accounting services, legal services, that's all ground zero for AI, to start disrupting now, not tomorrow, now. So it depends. And so when you're looking at stocks, I would actually, before investing in a stock, go ask AI, go ask Gemini, as we continue to fall here. Go ask Gemini, go ask your ChatGPT, go ask whatever, AI services that you're using, and have it plug in and say, tell me about the business. Tell me where they get their revenues from. Where do they generate the majority of their revenue from? If it says services, that's already a red flag. And we're not talking about physical services like, you could say you can get your hair cut. Well, that's not today. Humanoids aren't coming today. 5 years down the road, maybe the humanoids cutting your hair and those jobs get disrupted too. But AI is coming for the white collar jobs now, blue collar jobs later. So blue collar is safe for now. White collar, unsafe, very unsafe.
So we have an excellent question. Parimo Patel, you win this week for the best question on pre-market prep, and said, Triple D, how can all the individual stocks be getting slaughtered, but the SPY and QQ are holding up so well? This is something that we've been talking a ton about in the STN room, and this is, I think, a good time to bring it to the pre-market prep crowd. Triple D, will you address this question, please?
Yeah, and I'll add more color, and it is the question of the question. Like this is like what the market is like right now. How can the S&P be holding up well? We'll give you the answer in a second, and it's due to rotation, and it's due to some stocks being relentlessly going higher. So what we saw since the beginning of 2026 is that the average stock has moved 10%. That would be 10% up, 10% down in either direction. But the average stock has moved 10%. The S&P, as of yesterday, was completely flat for the year, 0. That's in the 99th percentile, because when you get typical 10% moves in stocks, it's usually the overall market volatility is really high and stuff is really happening here. That's not been the case. The S&P it's been very muted. Now, we're starting to see a little bit of fear come into the S&P and a little bit of the Qs. It started yesterday, continues today. The overnight rally, which is driven by retail, gone again. The S&Ps rallied overnight, gone again. You can show that rally if you want on the S&Ps. So we're starting to leak pretty heavily here. We're nervous with the CPI. Maybe the CPI gives us a light number and the markets rally. But right now, we're starting to see the markets get a little bit concerned. Well, how is this happening? How are stocks holding up? Because we've had hardware versus software and value versus growth. Hardware and value have done all the lifting to keep stock prices elevated. Hardware, NVIDIA is hardware. Apple is hardware. Tesla is hardware. So you got some of the Mag 7 that is hardware. Software we know has been killed. We know momentum names with nosebleed PEs have been killed. Value stocks have done well. AT&T and Verizon, classic value stocks, higher dividend. They've done well. Coke, Pepsi, Staples, drugs, Eli Lilly. So there's stocks that have been doing very, very well in this environment. And it's more on the businesses that the market deems safe from AI. That's what's really held us up. But yesterday, cracks formed. What started happening? They started hitting some of the hardware stocks. Apple had its worst day in a long time.
Yeah.
Tesla had a bad day yesterday. It's been holding up very well. They're making physical AI. That's what their company is going to specialize in. I think that's excellent for Tesla long term. But short term, people are starting to actually get nervous on this stuff. We actually saw SanDisk way up, Micron way up, but then they started to leak the gains back by the end of the day. NVIDIA kind of had a little bit of a tougher day. It hadn't been going down. AMD had been holding up fairly well too. Started going down a bit yesterday. So you started seeing a little bit more of selling across the board yesterday. Not in AT&T and Verizon. Those are classic defensive stocks. But this whole hardware versus software and hardware stocks flying high with the Microns and the SanDisk and the Western Digis and the NVIDIAs and, even Apple and Tesla, holding up. We started seeing cracks form there yesterday. So if we lose hardware, if we start to lose those major tech companies that are actually producing physical stuff, then the market starts to sell off. And that's what we saw yesterday. The market will not be able to, Staples will not be able to hold up the market by itself. Drugs will not be able to hold up the market by itself. And eventually, if it gets ugly enough, it comes for everything. But, when they're coming for the trucking stocks, I didn't see that on my radar. So
all right,
that's the short answer to your question.
Yeah, but I want to put a visual
Okay.
presentation here. And so Triple D and I started doing this show, back, 2012, 2013. We've been trading together since 1999, and I know I'm accused of my S&P, etc. Like focus, and Dennis is like, well, the Qs are out there, the IWM. You're looking at the top components here, right? NVIDIA, Apple, Microsoft, Amazon, Google. We count the 2 Googles, Broadcom. You look at these components, okay? Back when we started in the office, this looked a heck of a lot different.
Oh, it did.
Right? GE was battling with ExxonMobil, okay? And 26 years, it's transformed into this. But you know what? You know what's creeping back up here after being absent for a while? Walmart. Haven't seen Walmart in a while. Johnson & Johnson. Haven't seen that in a while. ExxonMobil. So you're seeing Burke is always kind of hung in there. So this is going to change. This is going to change. And
your top components are changing in front of our eyes slowly. Now they got a long ways to go to catch up. NVIDIA, I still say to myself, and you're talking about this in the STN room, you have AI clear winners and AI clear losers. NVIDIA is an AI clear winner. Winner. So it's hard to bet against NVIDIA. And I kind of want to buy more NVIDIA because I think AI is going to do things that we can't even imagine 5 years from now, we're going to be in a world we don't even know where we are anymore. And it's going to be driven by NVIDIA, and I believe AMD as well. I believe hardware is still, a buy on dips because it makes sense. And we're going to need more memory. We're going to need more, of this stuff. So some of those actually are going to stay, but then you're going to have some of those leadership stocks definitely fall out. And, maybe Microsoft is one that starts to fall out, or maybe Microsoft figures it out. But look at even IBM, and I've been long IBM.
Yeah.
I sold part of it 3 days ago, and people are like, why are you selling it? I'm like, because I'm worried about the services business. I'm worried about like their consulting businesses. I don't want to own stocks right now that specialize in services and consulting. I don't, even if it's like consulting on AI. I'm just too scared of those businesses here right now because it's just too ripe for disruption. So
consider this, the search that we were doing in the STN room the other day, yesterday, maybe 2 days ago, I think 2 days ago, we were just looking for stocks with the word consulting in the title.
We were.
And we were finding a name. We were finding a bunch of names.
And,
you guys want to?
Here's Jay bringing up a great point. We love you, Jay. You've been with us for like a decade here in the chat, maybe even longer. Talking about NVIDIA and saying if you bought NVIDIA in July 2025, you were flat. What we have seen, this is a great stat, bring it up. But what we often see is stocks make huge moves and then they go into consolidation station for a long time and then start to resolve themselves to the upside again. I believe NVIDIA is in a digestion phase, digesting all of its big gains from the previous 3 years. It's gone so far. Do we get a dip on NVIDIA? If we start getting markets crashing, NVIDIA is going to dip too. But that's the kind of stock that I would be buying on dips. I would not be buying the Salesforce.coms on dips. I would not be buying the H&R blocks on dips. I would be buying the NVIDIAs on dips. So I'm not buying anything today because I think the market is ripe to really get hammered. I think it is. I think the market's, there's enough nervous Nellies out here right now that we actually might start getting hammered. And by hammered, I don't think we're falling 20, 30% because I think AI efficiencies are going to help. I think there's going to be AI winners. I think there's going to be a lot of things holding us up. But, could we fall 5, 10% here, have a regular correction? Yeah, I think we're due for that. I think a 10% correction here could happen. There's a lot of warning signals, those warning candles that could happen.
Yeah.
Maybe that brings NVIDIA down to the 170s again. And then maybe that's where you strike. Because I do think long-term, if you've got a long-term time horizon, it's hard not to invest in data center plays. It's hard not to invest in NVIDIA. It's hard not to invest in hardware. It's hard not to invest in AI. Do I want to put all my money in Kroger and Coke? Am I really making a lot of money there? It's safe for now there. But am I really going to move the needle and, then 10x my money? Probably not. So I think some of these smaller names too. And I like the physical AI plays too. I think long-term, AI is making winners and losers right now. It's very important to have those lists. Can we hear a word from our sponsors?
We sure can. Thank you to Hive Digital Technologies, our sponsor for pre-market prep. We have a QR code on screen right now. You can scan that on your phone. You can also click the link in the description to get over to hivedigitaltechnologies.com, significantly expanding its global footprint through acquisitions of new sites, land, power deals, and data center deployments with its dual engine model that Frank talked about this week of expanding renewable powered tier 1 data centers while rapidly scaling its Buzz HPC unit into sovereign AI cloud. Hive Digital is a name that you might want to get on your radar for the year. Thanks again to Hive for sponsoring pre-market prep for a good few months now. They've been a great partner for us, and we hope that Hive has gotten some good love from our help too. Thanks again to Hive.
The Bitcoin conversation continues to go down, but now we're getting a little bit of a rally here this morning. Bitcoin is tricky because do they eventually come back in the crypto? I've said they do. I'm still hodling long term. I think eventually it does come back and the money does come back into crypto. But right now, speculation is being punished in this market and Bitcoin's a speculative vehicle. So it's guilty until proven
I don't
innocent.
know where Bitcoin fits in. I'm just
I don't know either.
Yeah, it's such a, because it is software, right? I mean, it is software.
Well, yeah. Well, it's created. It's its own internal software, really. The whole network is software. So it's something to think about here too. Like when we're punishing software stocks left, right, and center, the entire network's built on software. But I mean, the entire Robinhood's network's built on software. I mean, where does it stop? You still have all those connections. You still have all those believers. I mean, there's definitely going to be some software survivors. It's not going to be like every software company ceases to exist. So it's just a matter of the obvious ones that are going to cease to exist. Like I still think like an H&R Block. I think it just seems like ripe for disruption. So 825. Let's preview the
825.
CPI
Thank
because it
you.
is what is
Yeah,
going
yeah.
to matter in 4 minutes. It won't be AI. It will be the CPI. Let's see what happens.
All right, 4 minutes till CPI. This is the January reading. This was a delayed data point, but it wasn't delayed very much. We were expected to get this on Wednesday of this week, so it's only delayed a couple days related to the 2026 government shutdown. Folks, we are looking for a core reading month over month up 0.3%, a core reading year over year up 2.5%. The base readings are going to be just the same figures, also up 0.3% and up 2.5%. I like to look at the core readings because the core readings excludes food and energy, which can be very volatile and kind of like skew the numbers. So let's focus on that core number when it hits. I'll be breaking in with the news here in just about 3 minutes and 15 seconds. And then right after, we're going to get Blue Putnam, our resident economist, to give us some thoughts on maybe inflation, maybe deflation, maybe Blue will even want to talk AI, because I know the chat is so excited to keep talking about AI.
The chat's like, stop talking about AI, but the market doesn't want us to stop talking about it.
That's
If the
what it
market wasn't
is.
moving on it, we wouldn't be talking about it. But the market is moving on that. It's the only thing that matters here right now. Everything else is noise. Everything else in the markets right now is noise. Just like we were in the Trump market 5 months ago, where nothing else mattered except what Trump says. We're now in the AI market where nothing matters except the next AI disruption. That's where we are here now.
Yeah, I mean, interest rate focus. What a rate. Now we know it's not going to be till July or never. I mean, who knows? But let's just do a technical setup here.
Okay.
For I'll do it for the S&Ps. I know there's a lot of other indexes out here, but boy, the wall of 7,000 percent. Just look at that. I mean, every time you think you're gonna go to break through it, you don't. Let me know if Blue hops on early too. Okay. But just going for the day. If this number comes out good, should I go to the 1 minute for Brent? Brent, you want the 1 minute?
Yes, please.
Okay. 1 minute for Brent. If we could get green and get to that pre-market high, I don't know where there's any resistance because we came down so hard yesterday. If we breach that pre-market low, I don't have any good support for you because we just, like I was doing the levels last, and I'm like, last week's low was 67.51. How the heck did we get down there? The problem was we had 100 handle higher open and we had no check back. We had no chance. So really limited support if we take out the pre-market low. So there we are. We got I see Blue in the background here, Brent. Maybe you want to check with him. We'll see what stocks move. This number, I mean, it's a number, right? It's one number of many. Let's see what the trend is. Inflation, deflation. I can't say the quick algo's got the number yet. We are still 45.
I believe the number is going to be a lot of noise, though. So if we get a light number and we get a rally, I think you'll see. I think you'll see sellers into the rally. So I think we're going to have some noise here. I think we're going to get some major movement because the algos are programmed to move majorly on this. But I do think it's just noise here right now because where we're going is someplace completely different where nobody knows where we're going.
Is it that from Back to the Future?
Where we're going, we don't need roads.
Oh,
roads? Where we're going, we don't need roads. That is such a good line. That's the most underrated movie ever. I love that movie. I have t-shirts of it. That movie's awesome. Okay. Back to the Future. They just don't make them like that anymore. And AI is never going to be able to make a Back to the Future movie. I'm saying it right now. 5 seconds. Let's go. CPI. What's up?
Here we go.
Talk to me. Give me the numbers.
It's light.
2 points. It's light. CPI up 0.2% for the base reading. We were looking for a 0.3% increase. The core reading right in line at up 0.3% on a month-over-month basis. The year reading also right in line for core, up 2.5% for the year. The CPI reading base for the year was a little lighter than expected at 2.4% versus the 2.5% estimate. How are the markets reacting, guys?
When I say there's no resistance in something temporary like that, you better listen because we've gone straight up here. We've gone green on the session. Very, very important. But what's more important is taking out that pre-market high. And so far, we've stopped short of that pre-market high. But instead of me digesting the data, why don't we bring in our expert, Blue Putnam? Good morning, Blue
Good
Putnam.
morning.
Former chief economist at the CME. Well, Blue, you also have another role. Tell us about your new role and tell us how it's going briefly.
My new role.
You said you're teaching.
Oh, yes. Where I live down on the Chesapeake Bay, there's a great little honors college called St. Mary's College of Maryland. It's part of the county down here, and I'm teaching a course in economic topics, which means I get to pick the topics, and we're studying everything from tariffs to Fed independence to AI and how it's going to affect jobs in the economy. Great group of students, great college.
And if you ever need any guest speakers, bring it on. Triple
We'll
D.
wave
and
it
I.
in. Yeah, absolutely.
Yeah, we'll do it here. All right, Blue. Give us your initial outlook here, short and long-term implications of the recent CPI data.
Well, it's a little bit light. It's good. We're settling in more toward 2.5 than 3, so that's all good news. Basically, this number won't change anything for the Fed because the issues are very different there, in terms of Jay Powell leaving and Kevin Walsh's appointment maybe being held up and all of that. So the data is not quite as important. But it's still pretty good data. So we're cruising in here. It's not the Fed's target, 2%, but 2.5 is better than 3. So we're making progress.
Okay. So does 1 month make a long-term trend?
No, 1 month doesn't do much. But, we've had a couple of months in the sense of, well, we've been in a range really for almost a year, 2 years now. We came down from 9% CPI to 3%, and then we just started bouncing. But now we're bouncing a little more toward the 2.5. So that's good. But 1 month doesn't make a trend. You're exactly right.
Okay. Tariffs. Kind of swept them under the rug. Supreme Court, I don't know what they're doing, when they're coming out with a decision. So don't ask me. I mean, the whole rigmarole if they do reverse the tariffs. So that notwithstanding, everyone's looking for the impact. Where is the impact going to be? Is it going to be on services or where we all expect it on goods?
Oh, it's mostly on goods. I mean, we thought the Supreme Court was going to move fairly quickly on the tariff decision, and boy, did that turn out to be wrong. They're taking their time. I think the issues for them have gotten a lot more complicated. The tariff legislation that President Trump was using for countries when he puts tariffs on different countries is a 1977 act, and it doesn't ever. The word tariff doesn't appear in the legislation. It's all about sanctions and other things for a real big economic emergency. President Carter used it for the Iran hostage crisis. President Bush used it for 9/11, things like that. So it's very different use. So it involves two issues. Tariffs weren't mentioned, and how much of an emergency do you need to declare an emergency? Can you just not like Canada and the bridge?
Don't talk about our bridge, man. Oh, the Gordie Howe Bridge. Okay.
So anyway, I think the Supreme Court is really struggling with this decision. They probably made up their minds, but I have a feeling we're going to get like an opinion from almost every one of the judges. It's going to be complicated. And so it won't be as clear. If it's complicated, it won't be like yes or no. It'll have some nuances. So, but it's probably good for equities. Definitely will help on goods inflation. So, we'll see.
Okay, so here's our topic for the rest of your interview. We could probably talk about it for the entire day. We had our jobs number,
Yes.
jobs data, right? And 2025 was weak. we got a little bit of breath of fresh air, right? With the report, the market responded in kind and then got destroyed. AI. Like, what is the short, long-term impact of AI on the jobs market?
Typically, this is the concept of what a guy, an economist named Schumpeter, called creative destruction. We're always innovating, and innovation disrupts some industries and brings more jobs to others. We don't know what's happening in AI yet. We kind of get an idea of who's getting disrupted, software as a service and things like that. At the same time that we're getting AI disruptions, we're getting a little Bitcoin disruption. Things like Coinbase and companies like that have had a tough time with Bitcoin going down. So we really don't know, but I'm pretty optimistic that we're going to be more efficient as an economy, more productive coming out of AI. You can just see so many ways it's helping things work faster, but the jobs will come. It'll just take a little time for us to figure out where they are.
I mean, that's the question, is about efficiencies here, and everybody is scared of jobs. So let's just talk about that for a second here too, because you have some people saying, well, AI create more jobs than it takes away. Then you have a lot of other people saying that's not going to be the case. There's going to be a lot of jobs. I'm kind of in the latter camp, and I think AI is going to lose a lot of white collar jobs here. I think it's as it gets more efficient. We've heard about Meta flattening their workforce, which means they can lay off a few software programmers here, software engineers, because AI can do that job. What are your thoughts going forward? One, do you think we have less jobs in the future? Two, can the economy survive if jobs are going down?
Well, I think we will get more jobs out of AI, but we're kind of understanding at the beginning here of the revolution what jobs we're losing. You mentioned coding. The AI apps and things that do coding are absolutely amazing. I don't do that much coding, but I do enough, and they have made me way more productive. And of course, if you're coming out of college right now, this is not a great job market to go into, because AI seems to be rewarding a little more of the experienced worker that can ask the right questions. So if you ask the right prompts, then you get much better answers. And so you need a little experience for that. So that part has definitely changed. But the infrastructure is happening too. We're building data centers, that there are air conditioning issues, there are structural issues, there are electrical things. So we're going to create some jobs, but just not all in the same places and not quite as fast. So I'm looking for a pretty slow job year in 2026, but not a recession, just not very positive. And where we are going to get jobs are where we really need them. We need them in healthcare. And I think some degree tourism will bounce back, so we'll see more jobs there. But those are not the high-paying jobs, so they don't support the economy quite as much.
Blue, if you have, I have two young kids, 8 and 11 years old, and I'm trying to think, where do I want them to start focusing? Like if you were like, and again, probably going to computer programming is probably not the thing. 10 years ago, it sounds like that was a genius move. Today, it sounds like, that's not the best move at all. Like, where should they specialize? Where should they start looking? Or is it being a generalist? Is that going to be, good as well? Like, should you just have like a general knowledge of everything so that you can just ask AI any questions, on general knowledge? Where do you think kids should start focusing their education?
That's a really good, interesting question too, because I liked your transition from specialist to generalist. I'm going back to reading, writing, and arithmetic. I really think that communication skills, how well you write, how well you can communicate ideas, are going to be absolutely critical. And that's much more of a liberal arts education, a generalist kind of education, asking the right questions, being analytical about things, rather than memorizing something or learning how to do a basic coding. I do think, by the way, you should still take coding 101. I think it's important to understand what the computer is trying to do, but there are not going to be as many entry-level coding jobs, so I wouldn't specialize there.
What about teachers or musicians or podcast hosts or
economists?
Yeah, where's it for economists?
I don't think it's necessarily all that good for economists,
Blue, nobody can replace Blue. There's no AI Blue. I'm telling you right now, there's no AI Blue coming here ever.
Stayed on this unemployment picture. I don't know if you're familiar with any of the prediction markets, PreMarket or Kalshi. There's projections that by 2030, we're going to be up to by 7, 8, 9%. Do you just is it going to be a ramp up? And then the problem, what I see is that it's going to go up, but I think it's going to be a real struggle to bring it back down. What are your? And I know that's going far out for you, Blue, but I wanted you to comment on that.
Well, these prediction markets are really interesting. Let me talk a little bit about them first. I don't know what you were doing during the Super Bowl, but since the first 3 quarters were really pretty boring, and I didn't even think the ads were very good.
No.
But I did notice that Kalshi and some other prediction markets did a booming business because I was tracking the odds and probabilities during the game, and so. These are really fascinating markets, and I think they're really going to change how we look at certain things. But we do have to remember that the prediction markets, they're making most of their money on sports, not in economics. Those markets are pretty thin. And talking about where they're going to take us, I wouldn't trust the prediction markets on the economics. I think that the heavy users are the sports users, and it's the sports people that know what they're doing. So that's much more reliable than economics these days on prediction markets.
I mean, you got to have the TV live feeds. I mean, because there's such a delay. I mean, you could just see it. I mean, like TV is like watching a movie from like the 1980s. I mean, those markets move, and I was bummed because at 5:00, I'm like, I kind of thought, Seattle a little edge. I tried to sign on to Kalshi at like 5:00, an hour and a half before the game started, and I hadn't been there in a while. They're like, oh, we'll send you a code. You know what time I got my code to sign in? 10 p.m. 10 p.m.
How much money did that save you?
Goal for gambling.
I was going to bet Seattle. And I'm like, wait, I'm like, oh, I'm checking my junk mail and everything. But okay, Blue. Any closing thoughts here? And what I want to ask you about is, and we don't get market opinions out here, but I know you have your little trick, your little tool where you look at like the far dated options in the S&P 500 futures where the big money's selling premium, maybe buying protection or whatever. Tell us, I'm going to sound like an option expert here. Are you seeing any skew?
Yes, and the equity options are always skewed, but they're more skewed than usual for downside protection. People are really getting worried in trying to buy some risk protection of what AI could do to, what industry is it's going to disrupt next. And that's not good for the stock market as a whole. So people are way more interested in the downside protection right now. It doesn't mean the market's going to go down, but it means that's what they're worried about.
Blue Putnam, consultant, former CME chief economist, joining us here on Pre-Market Prep. Blue, your wisdom, your knowledge, your experience in these markets. You're my favorite economist.
All right.
He's our economist. That's why we love Blue. You're my boy, Blue.
Go Blue.
Thank you.
Go Blue. All right, Triple D. Brentster, what's up? Brentster got a big old smile on his face.
Market's rallying. He's happy the market's going up. Look at this huge rally we got going on in the market on this light CPI number. So give us those numbers here one more time because we'll digest it. Obviously, we love Blue's analysis. Let's give you our analysis here too. So give us the numbers.
All right. The numbers were in line on the core reading, up 0.3% on a month-over-month basis. The base reading, the numbers were just a tad light, up 0.2%. Economists were looking for a reading of up 0.3% for the base reading. I want to just mention real quick, we did get our updated CME Fed Watch numbers, and the odds for a June rate cut are back over to a favor now. July is showing an under 40% chance of a rate cut, and June is showing just over a 50% chance for a rate cut. So just a tad bit of an update there.
SPY's muted, QQQ muted response to IWM having a good response to it, although leaking. So again, if you're that algo, listen algos, listen AI algos. We're not in Kansas anymore, and that's why we're saying RIP's likely to be sold. You have a lot of overhead supply. You have a lot of nervous Nellies in this market, and they'll probably be using spikes on prices to get out. Sell the RIP is working again, and it's working very well. I tweeted it last night. And, sometimes, we're in a buy the dip market. Sometimes we're in the sell the rip market. Sometimes we're in both, where we're just trending sideways. Sideways market, buy dip, sell rip, buy dip, sell rip, again and again and again. Right now, we're starting to lose, some support levels in a lot of stocks. Markets feel heavy. We lost Apple yesterday. We're starting to lose some leadership. And that is why I continue to say sell rip. So IWM ripped up 2 points, already given half of it back. It couldn't hold for 15 minutes. I believe this market will go red today. I believe the numbers were fine in a utopian world without the AI concerns out there. CPI probably has this market trading up 30, 40 handles on the S&P right now. We are not in Kansas anymore, though. There is sell the rip camp everywhere out there. People are nervous. They are raising cash.
And, my old Friday theory, the propensity of the market, it's not my theory, it's statistics. The propensity of the market to make a new or higher low for the week on a Friday. Well, we already made a new low at 68.20. Let's hope that's the low for the week. What do you got for us, Spencer?
Let's do some rate the ratings a little early right now,
Sure.
and then we're going to save the back part of the show, the last 10 minutes, maybe a little less, for some ticker time, folks. You heard it.
Time.
That's right. Get your tickers ready. But first, let's rate those ratings. Want to say thanks to our sponsor, The Fly, brought to you by The Fly. The rating section. Fly is your source for over 1,000 breaking news articles daily, delivered in real time with custom filters and alerts. Discover their new The Fly Pro platform with AI-powered company analysis, unique KPI charts for deeper insights. Scan the QR code in the bottom right, folks, to get over to thefly.com and check out their new pro news and research platform. Our first rating queuing up for you guys. Well,
I'm going to give a pile of F minuses out here right now.
I know which stock it is. It's Pinterest.
I'm giving a pile of F minuses here right now. So listen up. Sorry, analyst, but this is what's happening here. So downgrading Pinterest this morning after, the stock has went down like 50% in the last month. Now another 22% fall. Now they all downgraded. Baird, UBS, Evercore, JP Morgan, B of A, Loop, Citi, RBC. Not to be outdone, lowering the price targets, but not downgrading. Oppenheimer, Wedbush, Stifel, Rosenblatt, Cantor, BMO, Piper, Guggenheim, Barclays. I know I forgot a few of you in there. Wells Fargo. Basically, every analyst on the street is downgrading or lowering their price target on Pinterest today. After the stock just got cut in half, after the stock falls 22%, now they downgraded. F minuses for all of you.
Did that one guy ever get out? Who was it? Who was big into that?
In Pinterest?
Oh, yeah. It
I don't
was
remember.
activist. Which activist was in there?
It was.
Man, I'm getting old.
It wasn't Einhorn.
No, one of the big ones.
Was it Barry Rosenstein?
No, I think it was Elliott.
Yeah.
I think it was Elliott. I don't know if they're out or not, but holy crap.
I hoop they are.
If they're not out, they're really active.
It was Elliott. Thank you, Sam HHVT. I'm dead. There's no more to say. I'm going to give what I'm going off the board. I'm giving this an L.
Late to the party. L's for late. Joel's grading system. He's got this
I like it.
grading system here.
Okay, so we did have, just to mention it, there were a handful of upgrades on Rivian. We don't have to go into it if you guys don't want to. There were a couple rating changes that I believe were not tied to earnings. Dollar Tree was downgraded to underperform at BMO. Thoughts on this one, y'all?
I think I would be buying the dip on Dollar Tree. I think we're still in a necessities-driven market where stocks companies we're playing defensive here. Dollar Tree, not that I love this store. Like I like other plays better. Like Dollar General, I probably like better.
Yeah.
Walmart's valuation is probably too extreme. I recently bought Kroger. Ollie's is out there. There's a lot of stocks in the space, and this is kind of one of the worst of breeds. But with that being said, I think it's the correct space to be in here right now because these businesses are, one, they maybe have more AI efficiencies, and two, they're not ripe for disruption. They're defensive. So I think this is where the market's actually hiding right now. So maybe they're trying to call a top here, but this definitely has one of the worst of breeds. So it's not one that I'm buying. So I think they're downgrading in the wrong sector.
I don't know. I just don't have a strong feeling on this one. I think I'd have to go. I mean, if we're sticking with our theme and everything of selling physical goods, I mean, I think this stock fits into that category. So I'll stick with the triple D. Maybe I'd be more inclined to buy the stock on a pullback than sell a rip.
Do the Rivian. Because Rivian reported allow us to do the earnings here too. It's up 25% today. I'm long Rivian in the long-term account. It's basically this move is making me whole again here. We are in the sell to rip market. One thing about Rivian is this is a physical AI company here. What do you mean it's AI? Yeah, it is. They're working on autonomy. So this is actually a physical AI, which is kind of where you want to be. The problem is it's luxury vehicles. And if we have like a bunch of software engineers out in California losing their jobs. Are they going and buying Rivians tomorrow? Probably not. People are concerned about losing their jobs. Are they buying Rivians tomorrow? That's my concern here is that I do think this company, I like the long-term prospects of it. Rough time for them right now, like not for them specifically, but I think rough time coming with potential consumer demand not being where it was. But with that being said, they're in the right space. And I like this story. And I was long this story, and I am long this story. And I do think they could be a major player in EV. And I love the earnings. I love everything that they said here. It's getting upgraded this morning from DB, but up 24% here. I'm not.
Triple D, I was going to channel my inner thoughts, and I was going to say that you were going to dump it into this.
I don't know what I'm going to do. It's possible. I'm in the sell to rip market. I just got done telling you how much we're in the sell to rip market. That's up 24%. I don't like Rocket yesterday, so I sold.
You did a good job with that. Yeah.
So I have my acronym for the year, and now I'm out of two of the. I was only in ever three of them, and I'm out of two of them. I sold my Rocket yesterday. I got out of the rest of it. I'd sold at 20, and then I sold the rest of it at 19 because I'm worried about 19. I think 19. I think is where I sold it around yesterday. I'm just worried about disruption to software companies, disruption to you have a bunch of mortgage specialists here using their software to get better deals and stuff. I'm like, it sounds like it's kind of in the industry where they could come for it next too. So I'm just worried about I'm trying to lighten up any stocks, any of my companies that are very much specialized and building around advisory services and software. And unfortunately, I feel like Rocket kind of falls in there too. So it's a tricky market right now. A lot of things have changed in a month.
I'd say area of interest here for me is this gap area. I mean, if you got stuck here, you're hanging out at 19, then you're under 14. I think a lot of people are getting their money back, and I would focus. You haven't quite got there in the pre-market, so you want to get followed through the pre-market high 1782. But this gap area, very interesting to me, between 18 and a quarter and 1865. That's a sell zone for me today in Rivian.
Let's do a decent 5 minutes of ticker time here. And Martin,
we had an early one. Take two, Brandon. I don't know if you saw it. Yeah, Martin.
That was from Martin.
He was one of the first ones to pop in there, Martin, on take two.
Appreciate it. And
unfortunately, take two is ripe for disruption as well. We saw the relief rally where you had a couple analysts saying, this is overdone. Take two is going to be okay. It's not software. It's not like these AI companies can create video games. Who's kidding who? Of course the AI companies are going to create video games. Of course AI is going to create video games. This is ripe for AI disruption too. The entire industry is going to be in trouble. I sold my Roblox because Roblox was the other one. I took the loss on it. So I made a little bit on Rocket. I sold on Roblox, took the loss because wrong industry. Everything changed. Everything has changed since January 1. We're now looking at AI doing things quicker than we thought previously possible. And AI is probably going to make video games here too, which is not good for any video game makers.
I cannot wait for the release of Grand Theft Auto 47.
Do you play those games?
Yeah, hell no, you know.
Hell no.
It's not coming out until November. You know, it's a catalyst. I mean, I never liked video games to begin with. So, but I mean, you can't get me. I mean, up a buck. I mean, I can't. I may not short this thing down here. I wouldn't sell it, and if anything, I think you could be setting up for a potential long here. Totally going against the trend, but that's what I'm doing. Oh, you got a double bottom on the weekly.
So you like Take-Two?
I'm sorry?
You like Take-Two here at the potential double bottom?
Yeah.
You have a level.
If it takes out 190.29, no.
9 is a good level here, but again, I don't know, man. I don't know.
If it takes out I mean, look at it both ways, folks. I mean, we talk about going long and short stocks. I mean, look at this. I mean, if it doesn't hold 190, whoop up on it, try it from the short side. Look both ways. I mean, things don't always have that's just hanging out, and you know what? It's not really getting away from there either. But you got a level.
We have Anthony Zhang and Wellbeing Warrior asking about Broadcom AVGO.
Okay, so Broadcom is an interesting case here because Broadcom is in the right area. It is AI and probably a beneficiary to it all. It has struggled here as of late. Valuation is nosebleed. They don't like nosebleed valuation here. It was cheap at one time and probably has gotten a little bit cheaper here. Like, let's go look, put our CFA hat on, because I tell you right now, CFA hats are doing well. Like, but we weren't in a CFA market. We are now analyzing different businesses. It's 69 times current earnings, but only 33 times forward earnings. So if they hit those projections that they're projecting out, then Broadcom's going to be fine. I kind of like the idea of Broadcom. I don't own it here yet. I think it's the right kind of stock, and I think it is an AI company that's going to benefit here. I mean, we do have some software in there too, though, with Broadcom. So it's not all, it's supply semiconductor and infrastructure software solutions. So software is not the place to be, but there's some hardware in there too. So I don't know. Like, I'm torn on Broadcom, very much on the fence on this one.
Don't know about hardware, don't know about the software, but I know you've had a big decline. When I see a big decline, you got to determine the bounce, right? And the bounce here, until this clears 356, that's halfway back on this move. The longer it takes you to get up to that area, clear that area, bust out. I know it's $18 away or $15 away. I think you got a much lower high on the weekly here. Little bit, I'd be a little bit nervous about this one. 356 is a long ways away, but that's.
So I just asked AI break down its core businesses, and it's 58% hardware, 48%, 42% software.
Wow.
So this is like right in the middle. So I said hardware good, software bad. This is both. So I'm like, do they gravitate to the AI accelerators, the switches, the connectivity, or do they start talking about like the VMwares in there, enterprise security businesses, enterprise software? Because that stuff's bad. So it's half good, half bad. That's why I'm like, was wishy-washy. This is a hardware and a software company.
Let's see if we can fit in. Let's see if we can fit in two more here real quick. EKS on Clorox, CLX. I like where you're thinking with this one. EKS.
Defense. Safe stock. Yeah, kind of. And it's been on the comeback trail. There's no doubt Clorox up 25% this year. I've argued, though, is there a bubble in some of these stocks? Like, I don't know if you need to chase these stocks. I think you put these on your winners list and you buy them on dips. That's where I think I'm at with Clorox, with AT&Ts and Verizons and all these, Staples, Cokes and Pepsis and Procter Gambles. I think you put them on your list and you wait for the dip opportunity here. It's up 25% in a month. It's a huge move for Clorox. It's definitely chasing at this point in time.
They need to sell smaller bottles. I mean, how often do you buy a bottle of bleach? Doesn't it just sit there for like ever? I don't touch it. Like, if something needs bleach, I'm like, hey, you do it. I mean, because I've ruined stuff with bleach. So I don't know. I'm torn on this one. Nice move off 100. It looks like it's got a solid bottom in here at 100. I don't know if you're going to get rich on this one. And I don't see how AI can disrupt bleach. So
One more real quick, Robinhood.
I don't see it either.
Robinhood.
Safe.
Robinhood.
Robinhood?
Yeah.
Oh man.
I know. I gave you guys a
So
tough
this
one.
is the controversial stock. Stock continues to fall. It's got the 50%, Kmart blue light special sale going on.
way below
now.
the 50%, Dennis.
Yeah, just it's fallen below 50%.
Oh yeah.
No, but I was saying it's 50% off from the price, not even 50% retracement from the all-time high. We've lost over 50% of the value here. It's down 50% from the all-time high.
Okay, I got you.
This is best of breed. Vlad is awesome. He's on the cutting edge of everything. Disruptor of disruptors. They've come in, obviously disrupted the entire brokerage industry, coming in with free trading. Now they're disrupting, they're moving into, everything else, obviously crypto, but then into, like a lot like sports betting. They're doing everything there, So I'm like, Robinhood does everything right. And if somebody's going to figure it out, it is Vlad. And you always want to, when you're investing companies, bet on the people who are running it,
the management,
as opposed to like good management, long term. So I think Robinhood's going to be fine long term. Short term, we're in shambles here because their clientele base is in all these nosebleed momentum names. Their assets under management have got to be just getting killed because they're not in Coke. The people who are in Robinhood aren't in Coke. Maybe they are now, but they weren't. And they're on all these stocks that have been murdered. So it's a little bit about assets under management. Those accounts at Robinhood got a lot smaller. So it kind of makes sense how much it's been beat up. At a certain point in time, though, this company is going to be a buy. So if you bought at 73, 5 years from now, do you make money? I don't know if anybody knows anything from 5 years from now. I don't know if anybody knows where we're going to be anymore. But I do think I like this company. I'd put it in best of breed and would be on my shopping list. And I think it will be fine. I don't think AI is going to come and create a brokerage here tomorrow. Maybe one day they're going to, but I don't think that's happening. All these connections here, I actually like Robinhood, but I want to wait till it stops going down.
Man, I'm kind of torn on this one just because it's so far down. I mean, if you want to be safe, wait for it to get back over $80, and that would be the 50% retracement of the whole move. It's just so beat up here. I kind of would have to be more bullish than bearish here, looking for a bounce. But I think Vlad might be running out of tricks here. The whole prediction market and everything that's blowing up, man. People got hurt. That is, people lost a lot of money on a lot of stocks, and their net asset value is absolutely pummeling. And people are not getting in. They're going to be losing their jobs, and they're not going to be able to refund their accounts and everything. So
yeah, you're talking assets under management, not asset value, AUM.
Yeah, AUM.
That's the problem. That is the major problem here. Is assets under management have got to been murdered, and has the market priced that in? Because the market isn't that smart. So has the market figured out that their assets under management have absolutely been pummeled here in the last probably 2 months? Probably not.
Oh, and the other thing with Robinhood, if the CFTC goes after these prediction sports markets, oh boy, Katie barred the door. So there's a lot of risk there. I'm gonna do my worst tangent of the week.
Let's hear it.
But only because and I just thought of this because we talked about Clorox. But you guys remember Mr. Clean?
Yeah.
Mr. Clean?
Yeah, of course. Yeah.
He was in my dad's high school class. Shut up. I swear to God, Dennis, don't doubt me on this one. You doubt me on this one, I'm crossing that bridge.
Mr. Clean was buddies with your dad.
Mr. Clean. And you can tell that.
Mr. Clean was buddies with your dad.
Yes, Mr. Clean was in my dad's high school.
He traded stocks with Lisa Sue, and Mr. Clean was buddies with his
dad.
You
bring that. Oh, I'm telling you, I'm going to prove you wrong.
All right, you two knuckleheads.
I'm going to prove you wrong, and then when I prove you wrong, I'm retiring. But
the one day you prove me wrong, you're going to retire.
Yep.
All right, that's a wrap, folks. If you want the conversation to continue, come over to stocktrader.network.com, sign up for your free trial. Somebody's saying we don't have a free trial. We've had a free trial the whole time, 7-day free trial. Then come on,
the code.
PMPSTN, 10% discount code. We're trying to compile winners and losers for AI. We're adjusting our portfolios, and again, long term is short term when you have like disruptions happening to your portfolio, and you got to be doing adjusting here. And right now, cleaning out the stuff that I feel like AI is going to disrupt. That is what I'm doing in my long-term portfolio.
Scott Brown at 9:45 in the STN room, a special guest joining us. Our friend Chris Brecher at 11 a.m. I'll be hanging out with Chris this morning. And then Triple D.
CC Legator, don't forget CC.
CC
Water
is
polo
on a
tournament.
little vacation right now.
Oh, and we're missing CC today.
Give the guy a break. Come on.
Yeah, CC, you get a day off, CC. We'll give you a day off.
Dennis, though, you forgot one of the most exciting things that's happening this afternoon in STN, though. One of your favorite times of the year. We have an extended weekend trade on the table here.
Oh gosh. Might be short in the weekend. I might actually go short in the weekend. Ooh.
That was a good tease, Triple D.
Yeah.
All right, folks.
Anyways,
we're gonna jump
enjoy
over.
your long weekend, folks. It's gonna be fun, and we'll be back with you PMP Tuesday morning.